Welcome to the Patrick Real Estate Show, where we explore the fascinating world of real estate investing with your host, Patrick Switek. Patrick is a dynamic young entrepreneur and an accomplished real estate investor who's passionate about helping others achieve financial freedom. Each week, we sit down with some of the most inspiring individuals in the real estate industry and delve into their personal journeys, lessons learned, and secrets to their success. Let's dive into this week's episode.
Hey, Anurag, welcome to the Patrick Real Estate Show. For the people that don't know who Anurag is, he is the founder of the one and only tool that a lot of freaking investors use, and that's Pricelabs. It is probably one of the most important tools you can have in your short-term rental toolbox. I'm a Pricelabs user myself. There's a bunch of other pricing tools, but from just surveying people that we work with, Pricelabs tends to be the number one most popular one. It's really awesome to have him on just to talk shop, hear a little bit more about his background, hear a little bit more about Pricelabs, maybe hear some tips and tricks from the man himself on how to do things in Pricelabs that maybe not a lot of people know about. Little sneaky features and things like that. So I'm just really excited to welcome him to the show. So welcome to the show, man.
Thank you so much, Patrick. That was a very glowing introduction. Thank you for that. Yeah. But yeah, where do we start?
Yeah, let's start. Where do we start? Or let's start with Anurag back in the day prior to Pricelabs. What were you doing? What was your story?
That's something I've memorized by this point. I don't think that should need memorizing at all. I know it, having been lived through it.
You should know.
I should know.
Yeah.
But so I came to the US in 2008 and was in Texas for the next 4.5 years, doing my PhD in a branch of engineering called operations research, which is more like applied math, more or less, if you want to say. And after that, got my first job at United Airlines doing what's called network planning. So like the applied math, applying it to figure out what size plane should fly what route, and liked it. But then there was another group called this revenue management group that needed somebody to help on a few things, and I had no idea what this thing was, but I'm like, hey, let's go and try. How bad can it be? So switched over to that side, and really, it was a great learning opportunity. I think over the next 2-3 years, ran so many simulations of different kinds of pricing systems to see, okay, if we change this input to that, if we switch the algorithm completely to something else, what happens, why does it happen, just digging into. I think the next 2 years there was a group of about 15 people, and everybody would work on different projects. And my job was to test what they came up with on the simulation. As I spent more or less the next 2 years saying no to people, because by then United's pricing system was pretty advanced already. It had been around for 20 plus years. Making improvements was not that straightforward. So people would come up with these ideas and I would test them and nope, still not doing better than what we already have, I think.
Yeah.
And that really gave me a lot of insight into how this thing works. How do systems work in general? And over the next few years, one of the things then that happened is one of my undergrad classmates was in Chicago as well, at Kellogg School of Management, Northwestern University. And then he had a spare room during summer because his roommate was going on an internship, and he was putting it on Airbnb. And we were talking, and he said, I have no sense of how should I set prices? Should it be $100? Should it be $200? What will it sell at? And then we were like, hey, just look at what hotels charge around you and charge that and see where it goes. And he's okay, that's a good start. And then but hotels also keep changing their prices. If there is something big coming into city, then they'll increase it. If there's high season, they'll increase it. If it's low season, they'll reduce it. He's like, how do I do these things? And then we started talking about it, and Airbnb was already 6-7 years old at that point, and we were like, okay, this thing seems to be up and coming. If it is going to make a dent on the travel industry, people will likely want to have a pricing system for this industry. So you're like, okay, can we do this? Can we solve this problem we started with the Chicago market, right? And that's where the start came, to say, okay, let's build something that will work for Chicago folks. So we would actually go around wearing a t-shirt that says, are you a Pricelabs host? Are you an Airbnb host that needs help with pricing? And hoped that there are Airbnb hosts who would stop us, and nobody did. So tried to find other ways to see how we can get in touch with folks who are hosting an Airbnb in Chicago. And yeah, got started there.
That's so interesting. I have so many questions, but I'm just first thing I'm thinking of is it's so similar to an Airbnb, right? In the airline industry, the moment the plane takes off, you can't sell that seat, right?
Exactly.
It's the moment that day passes at your short-term rental, you can't sell that seat to that home anymore because the day passed. It's very interesting that you say that was your background, because I think that has a lot of parallels to short-term rentals. Going back, I wanted to ask, before we even get into short-term rentals, tell us a secret. When is the best time to buy flights? I'm curious for myself. I'm sure other people are curious. Based on your data, when is the best time to buy flights? What have you learned from just being a United? And pricing-wise, with short-term rentals, waiting till the last minute is actually a really good thing, because people drop prices going down to the last minute. But curious, with airlines, it actually goes up. So I'm curious about your philosophy on that.
Yeah, so I'll attack that one first. Like, why is it different? Airlines historically have had loyalty programs, and a lot of their demand comes from business travel. So airlines would make deals with consulting firms, with Nike and Apple and whatnot, to say, hey, when you have business travel, fly us, right? And that combined with the loyalty programs, because if you have a loyalty program, a business traveler who's traveling is not spending their own money. If a ticket is $100 more expensive, they're like, it's okay. Not my direct money, it's the company's money, and the company has allocated whatever. There is some budget, and I'm within the budget. Whereas an individual, like somebody going on vacation, will be like, $100 with a family of 4 is 400. I would rather do something where I land than take this United flight and get points for later. Maybe some people would still do that, right? So those two things combined mean that, and business travel usually finds out that they have this meeting they cannot miss next week, tomorrow, day after tomorrow. And when there's a business meeting you can't miss, you're willing to pay whatever for it, right? So for those kinds of reasons, flight tickets tend to go up, whereas even for leisure travel, like leisure travelers tend to book a little early, which is why you will see that, early on prices can be a little cheaper, right? Prices won't stay cheaper if too many leisure travelers book early, because the airlines also know that, hey, there are enough business travelers coming in the end. We should not sell off everything at a cheap rate, kind of a thing.
Yeah.
So those two things combined make a difference as to why airlines go up in the end, whereas vacation rentals go down. There is one other very big difference, actually. Airlines.
So the sensitivity of a business traveler. You're saying the price sensitivity of a business traveler is a lot lower versus the price sensitivity of just somebody traveling for vacation or something like that. So is that possible for the short-term rental industry too, to get to that point where there's enough business travelers coming in where you need a place to stay as a business traveler, or do you think that's never going to be the case?
So then the other the other factor that comes in that brings short-term rental prices down as the time gets closer, and that's the fragmentation piece. Let's say, for the most part, let's say you're a business traveler who wants to go from Chicago to New York. Actually, Chicago to New York is a bad example. There are so many flights. Chicago to Omaha, right? There are only probably 3 airlines that would do that route direct. As a business traveler, you probably don't want to fly through Denver to get to Omaha. It doesn't make sense, right? And now, let's say it's last minute. There are 10 seats left on a United flight. This is the only morning flight, let's say. You're okay, United is okay if they sell 5 out of those 10 seats at $1,000 rather than selling all 10 at $200. So United would be like, hey, I'm okay. Let's keep the price at 1,000. We'll make 5,000 rather than sell all 10. You would need to drop the price to 200. You only make 2,000. Like, doesn't make sense. Now flip this to the vacation rental world. Let's say there is enough demand, something is happening, and there are only 10 homes left in a market on the same day, and the same mechanics apply. You can set your price at 1,000 and have a half chance of booking if everybody else is also set at 1,000. But you can drop a little bit and get it all. But now the 10 homes are all individually owned. In airlines, regardless of which one gets booked, all the money is going to United. But in this case, if yours doesn't get booked, you get zero. So you'll be like, I would rather take like something rather than zero. So you would reduce your price, and then this is what like perfect competition is about, right? Like the more competition there is, the true market price will surface, and all of those things happen. That distributed ownership.
So do you think you can control? Oh, sorry to cut you off. Yeah. Do you think you can control a market if you own majority of the inventory?
I think so. Yeah. So there are resorts, for example, in a location where there is not much else, where prices do go up as you get closer. They will basically say, we want our customers to book early, and they can create such things. The moment you start getting into a place but it's very hard to find a place like that where you have that kind of monopoly, right? But yeah, generally speaking, isn't that competition 101, like 101? So the more consolidation there is, yeah, exactly, yeah.
That's interesting. So it depends on the routes, right? In airlines, like if United has a lot of routes that one location direct, they have a lot more. They have a lot more control over being able to price however they want. That makes sense. So given this, all this, just for people to know, this is really just a fun thing. How far out do people have to book a flight to get the best price? Is it usually 4 weeks out, 5 weeks out for domestic?
Okay.
Or you can't share the secrets. Are they going to throw you in the dungeon and tell you that you can't?
I think there are enough public studies on this thing that...
Yeah.
Before I go there is another thing that I frequently hear, which when I was at United, we would break our head against the wall and like, where is this perception coming from? Which is your tickets on Tuesday morning. They're the cheapest at that time. And you're there is nothing in our systems that would do this. Like, where is Tuesday morning coming from? Every day is treated the same. Like, what's happening here, right? But maybe 20 years back, there was something in the pricing systems for airlines that did it. But that myth has stayed, and we just don't know like what is happening anymore. But in terms of lead time, I would say this also keeps changing. Generally, like book it at least a month out. If you're booking in the last month, you're now getting into the business travelers might be booking territory, and that's where airlines will be like, okay, we don't want to sell this for cheap. Whereas if you book more than a month out, you get better and better deals. Till you reach so far out, like if you get to, for a domestic flight, if you get to 4, 5, 6 months out, then there is the opposite problem, because airlines don't know well enough what the demand for the flights would look like. They say and because not many people are booking that far, they say it's okay to keep prices a little higher and hedge against, you don't want to sell too many seats and then to realize that something big was coming up and we should have not sold that many seats, kind of a thing. A month to 3 months mark is generally...
Yeah. So you think when people are booking like 6 months in advance, they're like, whoa, we're booking to get the best price. That's not true. No. Okay. I thought so.
Yeah. Because like those prices will go up. Like when there is more uncertainty in how your forecast is, the pricing systems will also then say, okay, because we don't know what's happening, let's keep it a little higher. You want to be booking generally when the first wave of booking, like first major wave of bookers show up. It's hard to know, but somewhere between 1 to 3 months is good. Yeah.
I want to kind of transition into...
Sorry, I do want to say this is like useless knowledge. I've tried to apply this and I don't think you ever win, because you only buy so many airline tickets that when you 4 months out, when you think about it and you say, okay, let me wait, and you see it going up, then you're like, okay, let's just book it now. Let's not wait for a month. Who knows what will happen. The best strategy is generally to say, this is how much I'm willing to spend, and if I get something below it, book it. kind of thing.
Okay, perfect. So that's not a hack that you guys do where you guys hike up the price 3-4 months out. No, it's actual demand factors at play.
Like this is it's not a hack, it's a natural mathematical uncertainty doing it.
Nice. So cool. So that's actually really interesting. How can we apply this to short-term rentals, right? This whole thing where people are always asking about when to price their properties. A lot of pricing, and especially now in this day and age, there's the set it and forget it crowd. Have you heard of this terminology? Where people just use whatever Pricelabs puts together and they just let it run and they don't touch it at all. I'm curious on your perspective on that.
We generally tell most customers to not set and forget it. You don't have to go crazy into the settings either. We see two extremes where there are folks who will go in and create so many of their personalized strategies around it that at this point, like, you've almost done too much. And then there are people who like turn it on and just let it be, right? The happy medium, and I think the folks who do the best are those who log in at least once every couple of weeks to see, and it again depends on how many properties you have. Like you have customers with 1,000 or 2,000 properties who have multiple people logging in every day because there are 5 people in their team whose job is to sit on Pricelabs and do this. And then there are individual hosts who will who have a full-time job and they are doing this Airbnb as a side. And I'm talking more about the second segment here where you're not a full-time revenue manager, right? If this is your side thing, even then at least log in a couple of times every month. If you are as a full-time investor, then I think you should be like going in at least once a week to see what's happening. And the reason I say this is there are plenty of things that you know about your property that we don't know. We know a lot about the market, but every property is unique. Every property has its own characteristics. And when you are setting up Pricelabs, one of the biggest things you do is set a base price, and we'll give you market data around it. But again, every property is so unique that every property's base price can be different by a margin, right? Generally speaking, you start at a reasonable base price, and then you look at what's the market's lead time, and you can see all of this in our neighborhood data thingy to say for different months, when do people book? And then you can almost see, okay, I'm only getting last minute bookings. I'm not getting bookings farther out. That generally is a sign that your base price might be too high. So maybe you need to tune it down, right? Or you look at it and, okay, my next 6 months are fully booked, and this market is where 90% of the bookings come in the next 3 months and you're fully booked for the next 6 months. That to us tells us, okay, maybe your base price is too low, like you went too low. So start with a reasonable number, look at the market data, look at, if you're an existing host, look at your own existing reservations and see where you should sit. And we have tools to guide you through all of this. But then looking at those things also helps you finally get to a good point. So it's possible that when you came into Pricelabs, your next 6 months were already booked. That to us immediately says you were priced too low, right? If your next 6 months are fully booked where the market isn't that way. And so we'll say, hey, let's actually bump up your prices if you're getting that many bookings and see what happens. And so we'll suggest a higher base price. And as you keep getting bookings, we'll say, hey, you're actually, looks like you're still getting bookings farther out. There is more room to go up. If you set and forget it, you'll stay at the level that you're at instead of saying, hey, there is more opportunity here that I can capitalize on. And markets are changing constantly. Even if nothing has changed in the market, it's possible that new inventory came up in the area that's just really good and it's attracting more bookings and you can't hold the same price anymore, in which case you should reduce your base price. And base price, we think of it as, okay, this is one control that we will provide you a lot of guidance, nudges, but it is something that you should have full control over. And so we do want you to come in, look at all kinds of market data, your own data, and say, okay, what should I change? Sometimes it's not even the base price. You go into the low season and if your minimum price is $100 and your base is 110, they're so close to each other that in low season everything is sitting at 100. You're not getting any bookings, and our system will tell you that, hey, lower this 100 down, like you're not getting any bookings. If you don't come in, you'll think there is no demand in the market, but possibly there is demand in the market, just that the minimum price is too high.
And that's interesting because we have 100 properties, and in Joshua Tree, California, we use Pricelabs.
Yeah.
We use it religiously, probably every 3-4 days. Josh and I, my business partner, we're super intentional about constantly tweaking things, always. Yeah. One of the things that we always notice is that there's a lot of default settings in Pricelabs, and this is what I want to chat about with you because you're trying to protect the users, right? So there's a lot of settings, like for example, after 60 days, you guys do an automatic, and correct me if I'm wrong, but after 60 days, you guys do an automatic gradual increase on price into the future. And something that we do with our pricing is we don't mind getting those further out bookings. And we know a lot of people in our market use Pricelabs. It's a very advanced market. We actually do no far out pricing. And that's been our strategy. And we get some pretty solid bookings like 6-7 months out that we would love to take all day because we have good base price. We know what it should hit. And sometimes we get prices where we look at it like, why did Pricelabs price so low for summer or whatever? And I think there's a lot to do with pricing dynamics. I'm curious what kind of defaults you guys have and how does that play in a role in your pricing strategy?
Yeah, so there are, actually I shouldn't start with a number. The first thing we do is we come up with a base price and then you can adjust it. You can look at market data and change it and whatnot. And the first thing we do is we look at the next 18 months, and we can go next 2 years if needed, and try to come up with a forecast for those each day in the next 18 months, right? And to do that, we look at history to say, okay, first week of September in 2025 is probably going to be similar to the first week of September in 2024 and the first week of September in 2023. But not just that first week, unless there is a special event. So in this case, it did, like first week of September is Labor Day, so we will look at those two. The last week of September, we'll say, okay, there's nothing special, there's no event going on. So we'll take last week of September 2024, but we'll also take a plus minus 1 week and then go back and plus minus 2 weeks. So we'll look at different dates around in the past and see what kind of demand was there, how much were people willing to pay, and things like that. That's one. As the date gets closer, now we course correct that forecast. So for example, maybe 2024 was booked 90% for Labor Day in your market, right? But 6 months out, maybe it was already booked 20%, and this year it's only booked 10%. In this case, we'll be like, okay, last year there was a strong early demand for Labor Day. 6 months out, it was already booked 20%, but this year it's only 10. So then we say, okay, the forecast is going to be a little softer than 90%. It's probably not going to hit 90%. It'll probably be lower than that. And that's something we tune our models to get right in some ways. That incorporates whether there's a special holiday or not, whether it's high season or not, what day of week it is, all of those things. So those come as default for everyone. So seasonality, day of week adjustments, events and holidays, they get added in. Based on that, we look at and say, okay, come up with a raw rate. And then we apply those things to say, hey, look, that date is so far away. Maybe it's trending down right now. It's 6 months out, and instead of 20%, it's only 10%. But there's so much time left that there is uncertainty. That maybe the 10% who booked last time are just waiting, they're going to book later. It's not like the demand is lower, it's just that it's going to book late. And so for that reason, we say, okay, because there is more uncertainty in this forecast, we add that far out premium to say, okay, let's hedge a little bit there to say, because it's so far, we don't know what might be happening. Then
so when you guys don't know,
yeah.
do you guys, oh, I was just going to say, when you don't know, do you guys adjust pricing higher? Is that what you said? When you don't know,
if
you'd rather not get it booked at too low of a rate?
Yeah, so when it is that far out, we basically say, let's not get it booked for too low when the forecast is not that certain, essentially. So that's the main thing.
That makes sense.
As the time gets closer, it almost flips. Now you have the forecast, like if it's a week away, you know that 90% of the demand that was going to book, 90+% in fact, has already booked. You're now competing for a handful of bookings in a market where there are 3x as many homes. To get those homes, you should discount your prices last minute. Now the question becomes how early or how late you should discount the prices. And there are mathematical models to come up with that. So those two things we apply by default. There is one other thing we apply by default. We call it occupancy based adjustments. And every time I explain this to somebody, they're like, that makes all the sense, right? Let's say you have two homes right next to each other. They are identical in all possible ways. And for that reason, you have the same settings, same base price, same minimum price, same length of stay restrictions. And one of them is getting constantly booked. They are the same physical properties. They're both managed by you, nothing different, equally good. A guest who books either will have an equally good vacation, right? But one of them is constantly getting booked and the other one is not. This is more about the listing than the property itself. Maybe it's not ranking high enough on Airbnb, maybe it got a bad review, all kinds of things can happen. And then we say, okay, if something like that is happening, how can we try and attract some bookings to the property that's not doing too well? This becomes especially important if you're managing other people's homes, because if those two homes have two different owners, then one of the owners who is not getting booked is going to be pretty unhappy about it. So we try to say, okay, like how can we get some bookings to the one that's not getting booked, and then these occupancy-based settings come in and say, hey, look, in the next 15 days, if nothing is booked, let's try to give an additional discount and see if we can get something in the bag for them.
What's interesting, Anurag, is I have a use case for that. I had a management. I got a management client. They have two properties, new builds, same pool, same interior, like maybe slight differences in how they look, and both in-ground pools, like right next to each other, same owner. And we rent them out together, but we also rent them out separately. And what's interesting is one was doing way better than the other, like by 20% or so. And I noticed that the owner was like very analytical and would always ask why the other one was lower priced. And we also adjusted base rate for that one because we needed to book it. But it was really interesting. It just hit the algorithm better. It's just that's what it was. So I like that occupancy based adjustment. It's really smart.
If you do combined units, we rolled out something a few months back where reporting is a little cleaner for combined units. So for your portfolio reporting, for example, one of the things, if you look at any of the occupancy charts in Pricelabs, you have two listings, two homes, and then you have a third listing for it, right? Which is the combined one. Now, if you just throw it into our reporting, we will say there are three listings. So denominator is 3 when calculating occupancy. And the numerator for any given day cannot be more than 2 because all three of them cannot have a booking together, right? And so it will look like even when they're full, the occupancy will always be less than 66%. And so we did something where you can now tell us that, hey, these are combined units. And then when we do our reporting, we'll account for it correctly that, okay, the third one is actually not a physical unit. Its bookings actually belong to these two. Denominator should be 2 and it should not be 3. Okay. Do try that one out.
Nice. That's parent and child listings, right? So you guys do identify that now.
Parent and child is slightly different in that parent and child is more for if you have an Airbnb listing and a Vrbo listing. If you're not using a property management system, you can combine them and say one is parent, one is child. And it helps in other ways. We invoice by number of listings, and if you don't map them as parent and child, we will think there are 2 listings. If you map them, we know it's only 1. The second one is if you map them, as you make a change to the parent listing, it also gets copied to the child automatically. You're only managing all your rates in one place instead of 2 places. This one, in that case, other than a commission difference between Airbnb and Vrbo, so you can have a markup on one versus the other, you generally want the rates to be similar. Whereas in your case, it's different in that there are two physical units and the third one is uh, actually a combined unit. It's not a copy of the same thing. In this case, in the parent child, you can say the child is a copy of the parent, the Airbnb or Verbo, whichever one. In combined unit, it's not, so slightly different.
Nice. All good. So I'm curious, transitioning, we're talking about the tools and how the back end works on that. Can you maybe just for everyone to know, to clarify how Pricelabs gets its data and how it makes pricing adjustments? Let's talk about that, just fundamental, just so people understand how that works.
Yes. So what we have been doing over the course of many years is scanning the Airbnb, Verbo, and booking calendars for every listing that's listed on those OTAs. And what we do is we have created this history to say, let's say yesterday when I looked at an Airbnb listing, I could see that on its calendar, maybe the last week of November was unavailable, but everything else was available, and we can also see what price it was available at. And then when we go to the same calendar again the next time, maybe we see that November 18th and 19th are now also unavailable, right? And when that happens, we say, okay, it's very likely that those 2 nights got booked. And we also saw what the prices were on those dates before it got booked. Now, from that perspective, we now have a sense of, okay, this listing got a 2-night booking for November 18th and 19th today on November 12th. And we'll say, okay, that's likely a booking. There are still edge cases here. It's possible that it's not a booking. The owner just blocked out the calendar because they wanted to get maintenance done or things like that. So we try to train our models to best identify what's a booking, what's a block. Nobody can do this 100% accurate all the time, but our aim is not for one home, but when you look at a market as a whole, when you look at 200, 300 homes together, the errors cancel out. So we train our system so that the errors cancel out, but the broader true trend of the market emerges. So we are then able to say, in November, a lot of bookings that happen are very last minute. If we find that not just this listing, a lot of other listings are getting bookings only a week out, whereas during summer, maybe things book a lot sooner. So that lead time question of like, when should you start discounting prices, when you should not, all those things can come out of this data to say, okay, in this market, we see that this is happening. When we come up with the forecast for pricing for every one of your homes, we look at similar homes in a very hyperlocal neighborhood. So if you're in one corner of Joshua Tree versus another corner, it's possible that there is some event happening that impacts one side more than the other. We don't want to look at all of Joshua Tree as a whole and say, hey, there is some demand in this corner, let's bump up the prices for everyone. We will look at a very localized level. So like when you go to neighborhood data, you'll see the close by properties don't show all Joshua Tree, but only what's close to you. Now, then I think I explained how we come up with prices with seasonality, day of week, events, and those things. Now, we show you the prices. You can then say, hey, these last minute prices are going too low. I never want to sell below $100. You set a minimum price of 100. Then maybe you know something. You know that first week of January, Pricelabs is saying it should be $230, but I want to bump it up by 10% because I think something is coming up. It's not announced yet, let's say, right? So you can do all of those changes, and once you're happy, you'll say, okay, I want to turn on this switch because I want to make these prices live on Airbnb or Verbo or your PMS and then wherever, right? And so from that point on, we will keep track of what's happening. So maybe nothing was happening in February today, but in a week's time, we see abnormal spikes in bookings in February, in the first week of February, and we'll say, let's raise your prices. So even without you knowing that something is happening in February, if we see demand, we'll bump up your prices so that when there is that demand spike, you can get a little higher rate. Or instead of staying at
how do you recognize Oh, sorry. How do you recognize a demand spike? Let's say a concert comes out, right?
Yeah.
Let's say Taylor Swift comes out or whatever
Yeah.
in your town.
Yeah.
And how do you know that, or let's say somebody smaller actually, because Taylor Swift's a big example, but somebody smaller, but somebody that's coming out that's getting some demand. And how do you know through the bookings that there's somebody staying there? Wouldn't the first few people have to sacrifice themselves and get a lower rate for the better good of everybody else?
Yes, and that's where the hedge somewhat comes in handy. We are tracking the entire market and not just our customers. We don't use one customer's data to price another customer, but we look at the closest properties as we look at Airbnb or Vrbo or Booking and say, okay, like somebody in this market got booked. 3 bookings in a day, 6 months out is not normal for this market, especially for a Monday night, let's say. Then we'll say, okay, like something must be happening. Let's bump the prices up. Now, how do you ensure that you're not one of those first 3 bookings? One is that far out hedge that I talked about. If you keep your prices slightly elevated, hopefully you're not the first ones to get booked. If it is a big name thing, we have a revenue management team that tracks events all around the world. So as they get announced, we plug it into our system to say, hey, something is coming up on these dates, we should raise prices. If you know something, then you can go ahead and do that as well in the system, and then you can give like our system feedback as well to say, hey, there's this event coming up here thing. Trying to attack it from different perspectives. If it's a no-name event, then yeah, like the far out premium is the hedge against it to say, okay, if nothing else, at least you get, if you become the first one to get booked, you at least get the 10% bump because it is far out. But hopefully somebody else gets booked and then your price is booked.
That's so interesting. I always thought about that. I'm like, interesting. So I'm curious if I was a data point on that, or was I actually had the price I needed to get. So interesting. So what do you see, Anurag, in the pricing industry? Like what's happening in terms of trends, pricing? You guys gather a lot of data. I'm assuming that you guys have some insights on what's happening at the market as a whole. Can you maybe talk a little bit about that right now? As of the recording, 2024, November?
I should have gone and looked at it before coming here, but I'll give the broad sense.
Oh, good. Whatever you have latest. Yeah.
Some of I will only be able to speak in very high-level general terms without having looked at it. But generally speaking, we hear from a lot of folks that this year has been a down year. From a lot of data that we have seen, it's averaged across all of US. It's been a stable year is what I would say. There have been markets that have been down, there have been markets that have been up, but averaged across, I think occupancy and ADR both have been stable. That in itself you can call as being a down year because inflation. If your revenue is constant but your costs are going up because of inflation, then your profits are going down, right? This question used to be so much more interesting in 2021 and 2022 because absolute new trends were showing up. Shoulder season was no longer a shoulder season. People would travel all through the year. I think things have gone back to, then a lot of people now are back to work and things like that, right? Generally speaking, even in 2018, 2019, we could see it, that lead times were shortening, which like how far out do people book? And we are continuing to see that happen, where like people are just waiting more and more. And we actually don't know if you look at the broader economy, a lot of economists say any election year, before the elections, there is a certain uncertainty, so like people hold off on their decisions. Actually, would be curious to see like what stock market is up now. I don't know if travel has seen something like that. I should try to find out. I haven't looked at it yet.
I'm interested in that personally. So if you can report back to me on that, because I think that people were being like, you saw leading up to election, there's like tighter lead times in our market at least. Tighter lead times, people are not spending as much, uncertainty. And then all of a sudden, election happens, stock market jumps. So the market's reacting. Before people start paying for vacations and discretionary spend, I think it takes some time, right?
Yes.
For that, you see that?
Also, especially if you're invested in stock market and want to do a vacation by cashing out some of the stocks, you probably don't want to do it right now. You want to see how far up this will go before you take it out. But it's you can with 100 properties, Patrick, you can see this in your own. Like if you go to portfolio analytics and the KPI section, it will show you on a week by week or a daily basis like how many new bookings have been coming in, and you can see if you see a jump up or not and things like that. But at a broader level,
I can see how many I could see individual bookings are coming in, right? How many per day? Can I see like? Because I haven't looked at those stats. Interesting.
Yeah. If you go to portfolio analytics and there's a KPI section on the top, we call it the KPI section, but it has the third chart at the bottom is trends by booking date, and those can be done daily, weekly, monthly, but it shows you number of bookings, ADR for every booking day, and things like that as well.
Interesting. I'll check that out. We'll see with my data set, my small data set, how that looks. That's cool. So what you're seeing future of, what are you seeing in terms of, like you're seeing the revenue management industry shaping form right now, right? There's a lot more people that are hiring revenue management companies. There's a lot of that. Is Pricelabs doing something about revenue managers and figuring out a good way for them to be able to utilize the platform? / what do you see in the future of pricing and revenue management? What are you seeing on your end?
Yeah, so we actually already work with about 50 revenue management consultants or partners worldwide, and this is you guys are very number savvy and you're in Pricelabs day in and day out, but depending on what your personal style is, there are folks who are very much into managing the properties but not so much on revenue management. I want somebody else to take care of it, and in those cases sometimes they will hire a revenue manager. Sometimes they will say I have 40 properties and hiring a full-time revenue manager gets too expensive. They would want a part-time consultant, and so when they reach out to us with that kind of a need, we will introduce them to one of our partners, right? We are then building more tools for revenue managers as well, to be able to making it easier for accessing their clients' accounts instead of logging in different places and things like that, right? We recently rolled out this reporting tool that we are finding is very popular with revenue managers, the report builder, where they can do a lot of it's an Excel tool almost, where they can create very customized reports and then export to Excel and do a lot of their analysis, forecasting work in Excel, which for revenue managers, for a lot of career revenue managers, Excel is the tool of choice, right? So doing a few things on that front to see how we can serve revenue managers better as well. Yeah.
Amazing. That's exciting, but I want to get to close this off in the last 3 questions for you. The first question, what book or educational resource has been instrumental to your career or what you've done in your life? Doesn't have to be real estate related.
What book or educational resource? I'm feeling ashamed to say this. I read fiction, but I've not been too much into reading non-fiction.
Let's hear a fiction book. Storytelling is a huge way of showing values.
And it's been changing over time. I read Harry Potter and loved it, like so many others. In college, I read Fountainhead and loved it. By the time I graduated out of college, I was like, okay, Fountainhead seems a little too strict about a few things. I don't think life works that way. I feel like it's been changing over time. I want to say my general way of working is a lot more go back to the basics. Like I almost don't want anybody to teach me things. Give me something, I'll play around with it. I don't like reading manuals. I'll play around with it and figure out what can be done. As I get into a problem, then I'll search for it and then find the answer. Very hands-on thing.
Yep.
Yeah.
Perfect.
There is
good. So that's great. Yeah. Next question is, what does the future look like for you and Pricelabs?
All right. Second part of that question.
Doesn't have to be elaborate. Just
So I can answer it for the next year, I want to say. We are
perfect.
like on the revenue management side, right? We have been in the dynamic pricing space for about 10 years already. Reporting is something that we heard as a need from a lot of revenue managers 4 or 5 years back, and we started working on it. And I think this year we have like really topped it off with a lot of excellent reporting. We are trying to see what are the other things that short-term rental hosts, owners tend to do that they spend a lot of time on, and where we could build something for them with the data that we have and the engineering expertise that we have that will save them time save them time or help them do those things better. So we have identified a few of those to say, okay, like here are some other tools that can be used. One of those that we already rolled out, the revenue estimator thing, like if you're looking at a new property, being able to figure out if there is this amenity or not, if it is managed by a property manager or not, how would the revenue potential change and things like that. So essentially trying to address that. The second is more and more of our customers seem to be going into mixed inventory. So we are seeing a lot of people who are managing a boutique hotel or extended stay motel or things like that. So we are trying to see, okay, how can we serve that segment better? They're already using Pricelabs because they also manage short-term rentals. But when you're managing a boutique hotel, like there are some nuances that can be a little different, and like how do we serve that customer better, essentially. Yeah, in the next year you'll see a few more products come up. A lot of the current emphasis, this is now talking like the next 2 months future, but right now a lot of focus is on, we are upgrading our entire UI stack.
Perfect.
Upgrading the platform everything was built on so that it's
this.
faster, more modern, looks nicer, and all of those things. So you'll see a lot of that come up in the next 2 months. So a lot of focus this year has been on that as well, to say, okay, speed is important. If we can save customers 2 clicks, and between those 2 clicks, instead of taking 2 seconds, if it takes half a second, everything that saves a customer time is good.
Anurag, you know how long I spend on pricing? I think sometimes I spend 3 hours going through pricing. So if you can make that easier on me, shoot, man, you got yourself. That'd be awesome.
Cool. Have you been to the multi-calendar
Cool.
yet?
So last question.
Yeah.
Oh, sorry.
I was saying, do you guys use the multi-calendar already? Because that's number one in saving time. When you have 100 properties, then cool.
Yep, we do. And we got to do some other stuff. But yeah, it's been helpful. The syncing has been the slowest. I already talked to your team about it at VRMA, but all good on that. Cool. So last question. If people want to reach out to you or learn about Pricelabs, how can they do that?
Yeah, so to learn about Pricelabs, the very basics are obviously on our website. So the website is Pricelabs. It's in my name here.
To reach out to you.
Oh, to reach out to me. Just my
if
first
they're trying
name.
to reach out to you.
Yeah, my first name at pricelabs.co. That's my personal email.
That's A-N. Yeah, it's ANURAG at pricelabs.co.
Yes.
Yep.
Not
cool.
.com. Yes, important.
Not .com. That's .co.
Not .com. Yeah.
Yep. Cool. Awesome. Thanks for hopping on, Anurag. Thanks for sharing your insights. This was awesome. I learned, honestly, so this was great. And I'm going to be using your pricing tips on airlines now. So United just lost probably $200 worth of value every year through my saving money on them. But anyways, thank you so much. Appreciate being on, and hope you have a good day.
All right. Thank you so much, Patrick.
And that's a wrap. Thank you for listening to the Patrick Real Estate Show. If you found this episode helpful, please give us a follow and leave us a 5-star review. Your support truly means a lot. And connect with Patrick in the show notes below. Until next time.